Westpac hikes rates for the fourth time in 2 months. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because, well, Westpac, they've hiked their rates once again. This seems to be a common video that's happening again and again. This is the fourth time in 2 months that Westpac have hiked their rates. So let's have a look at this article from Broken News. So Westpac makes fourth rate hike in 2 months, written by Mike Wood. Westpac has made its fourth rate hike in just 2 months, shifting their 3, 4 and 5 year fixed prices upwards by 30 basis points. The move is replicated across their subsidiaries St. George, Bank of Melbourne and Bank SA. Now, just a reminder, if you've got $250,000 in one of these banks as a deposit and you're hoping that, if you put $250 in Bank SA, $250 in St. George, $250 in Bank of Melbourne, $250 in Westpac, that each $250 is covered separately. My understanding is it's all by one bank and their subsidiaries, so you're only covered for a max of $250. You've got to shift it around a bit more. Anyway, back to this. Westpac's 1 year fixed rate was raised by just 10 points, while the 2 year fixed rate went up 25, with all rates now being upped significantly since Australia's biggest cities exited lockdown in October. The 1 year rate was 1.99 then, but is now 35 basis points higher at 2.34. The 2 year rate, which was previously the lowest at 1.89, has gone up 60 basis points to 2.49. Those of us who have locked in our mortgages, because I've locked in at 1.99, we're going to get hit with a bigger interest rate once those periods end. So you've got to prepare for that, everyone. The 3 year fixed rate, which is now pricing in a cash rate rise at some point in 2023, has jumped a mammoth 91 points, going from below the 2% barrier at 1.98 to 2.89. The move represents a $235 difference in monthly repayments for borrowers. Rises in even longer term rates, which have seen 4 year fixed rates 70 points from 2.49 to 3.19, 5 year fixed up 60 points from 2.79 to 3.39, reflect an expected rise in the cost of funds on the bond market. It represents the next phase of the interest rate hikes that have been seen widely across the big four banks in the last 6 weeks as the market attempts to react to the Reserve Bank of Australia's decision to abandon their commitment to not raising the cash rate before 2024. Westpac has now hiked its fixed rate 4 times in just over 7 weeks, and its 3 year rate for owner-occupiers rising by almost a full percentage point in that time, said Sally Tyndall of Rate City. Anyone considering a fixed rate with Westpac will be gobsmacked by these increases. But they're certainly not isolated to one bank. Many people thinking about fixing their rate may now be reconsidering their plans. The average borrower taking out a $500,000 3 year fixed rate, along with Westpac, will be paying $235 more a month than someone who took out the same loan 2 months ago. Unfortunately, we haven't seen the end of these fixed rate hikes, and we expect them to head into 2022. Now, I have a family member who's looking at buying. Contacted a broker, and the broker, in his estimates of what she could borrow, said plan for interest rates to be 4%. So there you go. That just shows you. So of course that's going to limit what she can borrow, limit what she can buy, but it's also sensible. Let's have a look here at what was sent out. And here are the rate changes effective from the 8th of December. We can see here, this is fixed rate owner-occupier loans, principal and interest repayments, currently, and comparison and the new. 1 year's gone up 10 basis points, 2 years up 25, 3 years up 30, 4 and 5 are up 30. We go down, owner-occupier, and this is from St. George, or is this Westpac? Here we go, Westpac. Fixed, we can see up 15, 25, 20, 30, 30 at St. George. Now let's have a look at what the actual impact will be. So from a $580,000 mortgage, the 5 year increase from 3.19 to 3.66 is equal to $151 additional payments a month. So that's starting to get into a serious, that's internet and a half. That's internet and all the mobile bills for the family. That's 150 7-Eleven coffees. That's a 6% increase in this housing cost expense. It's not insurmountable. But let's say you paid $700,000 for your mortgage. Well, that's your mortgage. You're talking $182 additional a month. $60 a week. I'll bet no. No, not $60 a week. I can't do mathematics. Here, we'll divide that by 4 so I can... There's not more than 3 weeks in a month, Florian. There you go, 45 a week. So, guys, there we have it. Another interest rate rise from one of the big 4 banks. Westpac has increased their rates. It's what we're seeing happening everywhere. Now, if you're in this position, let's have a bit of a talk. If you're in a similar position to me where you've fixed your mortgage and you know that when you get out of the mortgage rates, it's going to flip over to variable and you'll have, well, higher repayments. I suggest you get out the Excel spreadsheet, you do the sums, and you just estimate what that cost will be, what that additional repayment rate will be. Honestly, it probably should be something you were used to anyway, with higher rates than the insanely low ones we have now. So it shouldn't be a surprise, but you should still prepare, check, and plan for that increase that's coming. We're going to have it in the next couple of years. And hopefully for most people, it won't be a dramatic impact on their ability to keep their home. What I suspect it will be, it'll cool the housing market. It's not going to keep going the insane rate it has been. And if anything, it's going to impact on, well, consumer spending, retail spending, people spending money getting out there, guys. Anyway, check out this last video in what's now becoming a series about interest rate rises, guys. I should really make a playlist of them. I probably will. Anyway, take care, everyone. Have a great day. And I will see you tomorrow with a whole bunch of new episodes of exciting things. Take care.